Exercise 1.14. The given information for the accounting period ending on 28 February 2025 with comparative figures for the previous period was taken from the books of Black Limited. Required. 1.14.1. Prepare the note of the reconciliation of the net profit before tax and the cash generated from operations, note 1, on 28 February 2025. 1.14.2. Complete the statement of cash flows for the year ending 28 February 2025. Where notes are not required, calculations must be shown in brackets. 1.14.3. Calculate the net asset value per share on 28 February 2025. Information. Number 1. Extract from the statement of comprehensive income on 28 February 2025. They give you the revenue, the depreciation, interest on loan, net income before tax to be calculated, and our income tax at company tax rate of 28% is 159,040 rand. Number 2, extract from the statement of financial position or balance sheet on 28 February. They give us the 2024 and 2025 years, ordinary share capital, retained earnings, non-current liabilities, mortgage loan ABSA, current liabilities for trade and other creditors, and bank overdraft, non-current assets. Your current assets is inventory, debtors, and cash equivalents. Information 3. Note the statement of financial position or balance sheet. Number 1, ordinary share capital. We had authorized shares, 800,000 ordinary shares. Issued shares, 200,000 ordinary shares in issue at the start of the year, 700,000 rand. 150,000 ordinary shares issued during the year, 1,260,000 rand. 30,000 shares bought back during the year to be calculated, and 320,000 shares in issue at the end of the year, 1,792,000 rand. Number 2, trade and other creditors. They give you 2024 and 2025 figures for trade creditors, income received in advance, shareholders for dividends, and SARS income tax in 2025 is a debit balance of 9,050 rand. Note number 3, non-current assets. Again, figures for 2024 and 2025 is given for land and buildings, vehicles, and equipment. A new vehicle was bought during the year for 320,000 rand, and an old vehicle was sold during the year. Number 4, trade and other debtors. Again, 2024 and 2025's figures is given for trade debtors, accrued income, and SARS income tax as an opening balance on the credit side of 4,800 rand. Number 4, additional information. The dividends owed on 28 February 2024 were paid in full on 4 April 2024. An interim dividend of 28,000 rand was declared and fully paid during the year. During the year, 30,000 shares were bought back. Firstly, we need to do 2 calculations for the appropriation account and the retained earnings. For the appropriation account, you first need to remember your format. Remember, on the debit side, we start with income tax, ordinary share dividends, and your retained income. I've made a start retained income because it's going to be our balancing figure. And then on the credit side, it gets closed off to the profit and loss account. The income tax was given as 159,040. Our ordinary share dividends, if we go back to additional information 4, the dividends owed on 28 February 2024 was paid on 4 April. An interim dividend of 28,000 rand was declared and fully paid. And then if we go back to note number 3 and note number 2, SARS for dividends in 2025, 76,000. So our dividends will be 28,000 plus 76,000, and that gives us a total of 104,000. So So that would be the calculation for ordinary share dividends. Our profit and loss account is 568,000. How I calculated the net income before tax, which goes to the profit and loss account, is if you go back to information 1, income tax at company tax rate is 28%. So the income tax amount that we paid was 159,040. We divide by the 28%, so we work backwards, and then we get 568,000 Rand as our net income before tax. So if we go back to the appropriation account, our credit side will be 568,000. We will close it off and balance it with our debit side as 568,000 as well. So to make our appropriation account balance, our retained income will be our balancing figure. So 568,000 minus 104,000 minus 159,040 gives us 304,960. The retained income account. Again, we start with our format. So on the credit side, we're going to have balance brought forward. Then we're going to have appropriation account. And on the debit side, we're going to have our bank, which again will be our balancing figure, and our balance carry forward. From information 2, our balance brought forward is 727,040 Rand. And our closing balance is 960,000 Rand. The appropriation account is 304,960. This amount we get from the appropriation account that we've just completed at the top. Now we close off the retained earnings account. If we add the credit side, it equals to 1,032,000, and we must make it equal to the debit side as well. So your bank will be your balancing figure. We work backwards. 1,032,000 minus 960,000 gives you 72,000 as your bank. 1.14.1 Reconciliation of net profit before tax and cash generated from operations. We start with profit before tax. As from the previous page, it was your income tax of 159,040 Rand times 100 divided by 28, which was the 568,000 Rand. Then we consider two adjustments. First one is depreciation, and the amount was given as 218,000. And then interest paid, with the amount given as 62,000. So your total adjustments, 218,000 plus 62,000 gives you 280,000 Rand. If we add that to the profit before tax, then our profit from operations before changes in working capital is 848,000 Rand. Changes in working capital, we start with our inventory. If we go back to information 2, the inventory in 2024 was 712,000, and in 2025, 690,000. So there's a decrease in inventory. 712,000 minus 690,000 is 22,000. Out of brackets, as it's an inflow in cash. For debtors control, we go to note number 4. Remember, we include the trade debtors as well as accrued income or prepaid expenses, but in this case there's only accrued income. So for 2024, it's going to be 67,300 plus 9,700. And then in 2025, it's going to be 53,200 plus 2,800. And then we will get a decrease in debtors. And the amount will be 21,000 out of brackets. It's out of brackets because it's an inflow of cash. For our creditors, we go back to information 3, note number 2. Remember, we consider the trade creditors as well as income received in advance. And if there was accrued expenses, we would have considered that amount as well. So for 2024, it's the 37,900 plus 8,100. And for 2025, it's the 43,700 plus 4,300. And that will then give us an increase in creditors. And if we calculate the amount, it's going to be 2,000 out of brackets. Because once again, it's an inflow in cash. So our total changes in working capital will then be 22,000 plus 21,000 plus 2,000 to give you 45,000 Rand. So your profit from operations before changes in working capital plus your changes in working capital then gives you a cash generated from operations of 893,000 Rand. 1.14.2 Statement of Cash Flows of Black Limited for the year ending 28 February 2025. We are going to start with the cash flow from operating activities, and then we're going to do the cash generated from operations. We start with our interest paid, and that was the 62,000 given in brackets because it's an outflow of cash. Then we have to complete the income tax paid. Now remember, for income tax paid, you can either do the ledger account or you can do a basic calculation. Your basic calculation is your opening balance plus your income tax amount minus your closing balance. According to the information given in this question, we started with an opening balance on the debit side, so it's negative 4,800. Then we paid 159,040 in our income statement towards income tax, and we minus our closing balance of 9,050, also from information given. That gives us then 145,090 Rand as your income tax that was paid during the year, and that once again is in brackets because it's an outflow in cash. Your cash generated from operations is the 893,000 that we calculated from the previous page. Dividends paid is next, and how we calculate the dividends paid is if we go to the question, information 3, note number 2, our shareholders for dividends in 2024 was 88,000. So that's the first amount that we will pay. And then additional information 4 states an interim dividend of 28,000 Rand was declared and fully paid. So the two amounts that was paid towards dividends is the 88,000 owed in the beginning of the year plus the 28,000 interim dividends declared and paid. And that will then give you a total of 116,000 in brackets because it's an outflow of cash. So our cash flow from operating activities will then be cash generated from operations minus interest paid, minus income tax paid, and minus the dividends paid to give you a total of 569,810 Rand. Cash flow from investing activities, purchase from fixed assets, and the question stated a new vehicle was bought during the year for 320,000 Rand. So we will have 320,000 in brackets because it's an outflow of cash. Proceeds on sale of fixed assets. We start with a basic calculation on the side. Remember, it's your opening balance plus any purchases minus your depreciation minus your closing balance. So if we go back to the information, our opening balance is 1,790,000. We add the 320,000 assets purchased, we minus the 218,000 depreciation, and we minus our closing balance of 1,850,000, and that will then give you 42,000 rand. This amount is out of brackets as it is a inflow in cash. So our cash flow from investing activities is then 278,000 in brackets. Cash flow from financing activities. We are going to start with proceeds from issued shares. If we go back to the information 3, note number 1, they state that 150,000 ordinary shares is issued during the year and it amounted to 1,260,000. So that would be out of brackets because it's a inflow in cash. Repurchase of shares. To calculate the amount that we repurchased, we go back to information 2, note 3, to the issued ordinary share capital note, and we have to work backwards to calculate the amount that was bought back. So we take the 1,792,000, we minus the 1,260,000 shares issued, and we minus the 700,000 rand at the beginning of the year to give us a balancing figure of 168,000 rand. That is our shares purchased for this year, the amount of 168,000 rand. But remember, it's the ordinary share capital amount plus the amount that goes to your retained income, and we calculated the retained income amount when we did the calculation in the beginning of the question, and the amount was 72,000 rand. So our repurchase of shares will be 168,000 plus 72,000 rand to give you 240,000 in brackets because it's an outflow of cash. Our loan increased. If we go back to the information, we started with 450,000 rand and now we have 620,000 as our loan. So there's an increase in our loan of an amount of 170,000. And that'll be out of brackets because it's an inflow of cash. So our cash flow from financing activities, we will add the proceeds from our shares issued, we will minus our repurchase of our shares, and we will add the increase in our loan amount to get an amount of 1,190,000 rand. So our net change in cash and cash equivalents will be our cash flow from operating activities plus our cash flow from investing activities, or in this case we subtract it, and then we add the cash flow from financing activities to get an amount of 1,481,810 rand. Our cash and cash equivalents at the beginning of the year is 572,760 in brackets, and that then gives us our cash and cash equivalents at the end of the year of 909,050 rand. 1.14.3, calculate the net asset value per share on 28 February 2025. Okay, so to do that, it's your shareholders' equity divide by the number of issued shares times 100 over 1. Now remember, your shareholders' equity consists of your ordinary share capital at the end of the year plus your retained earnings at the end of the year. So it's going to be 1,792,000 plus 960,000 divided by the number of issued shares, which is 320,000 shares, and we get this information from information 3, note number 1, and then we times it by 100 over 1 to get 860 cents per share.